Hey guys, welcome to the Health or High Water podcast. I'm your host, Trip Parks. I'm here with the esteemed Billy Stone. How's it going, Billy?
Hey, how's it going? I'm good. I'm good. How are you?
I'm doing great, man. I'm really excited to have you here. Billy works with life insurance, and we both really connected, especially with end of life situations and stuff that he works with. And I'm excited to dive really deep into that and give you guys an understanding that some information you all really need to know. Doesn't really matter the age, doesn't matter your situation. If everyone's healthy, everyone's sick, this is information that everyone should be learning. It's stuff that I'm dealing with right now with my mom. So make stay tuned for that. But real quick, I want to give a quick shout out to our sponsor, Gene Planet Genetic Testing Company. Now, we partnered with Gene Planet about 3 or 4 years ago with one of the guys is because we wanted a safer product. The United States HIPAA does not cover your genetic testing, therefore they can sell your genetic data to anybody they want. And I'm sure you guys have seen a few instances on especially LinkedIn on the news about genetic testing being your data being sold. With Gene Planet, that falls under the EU's HIPAA, and they cannot sell your data. So it's one of the safest, securest genetic testing you guys can find. It also has whole genome sequencing where we can update your genetics as we learn more about genetic testing. So if you're interested, go to geneplanet.com, go to premium test, and put code APT for 30% off. That's code APT for 30% off genetic testing to find out your unique genetic profile. Billy, it's so good to have you here, man.
Hey, good. It was great to be here. Thank you for having me.
Yeah, I want to give a huge shout out to what you do, man. You take care of people till the end, and that's a hard situation, especially for the audience that doesn't know. My mom had a stroke-induced dementia, or vascular dementia, and we're dealing with a lot of issues, incontinence, trouble eating. We don't have a lot of money for in-house care, so we've been kind of up, a creek without a paddle. And I talked to Billy here, and he's a passionate person in this industry, and gave me so much great information. Sent me a ton of information on email about this process, about what he does and how he takes care of people. And I couldn't be more grateful for how thorough this man has been with me in this process. So, Billy, thank you for being thorough. Thank you for being a people person.
Well, you're welcome. You're welcome. I appreciate that. It's what I do.
Yeah, man. So, speaking about what you do, what exactly? What's your title? What do you do? How long have you been doing it? Why are you really passionate about it?
So I am a financial advisor. I got into this business as a kind of a second career about 5 years ago. And one of the things that we do investments, we do personal planning for individuals and couples, and we also cover the insurance side of things, which is one of those things is long-term care that we provide folks.
Let's.
And part of the reason I got into this was really just a calling to really kind of dive more into people's personal lives. One of the things I always did in my workspace was really try to engage with people on the personal level. And it was meaningful to have a work relationship, to have that. But, for those folks that felt a connection to, just, hey, man, let's go to lunch or let's hang out a little bit more together. So I always wanted to understand them and their family a little bit more. So,
That's so important in today's day and age. Everyone consumer wise feels like a number, you know,
yeah,
and that's
this is
just
true.
sad because everyone's unique and different and amazing in their own right. So with financial advising, these kind of things, you and I talked a lot about long-term care and end-of-life care, those kind
Sure.
of things. How did you get into specifically that when you're working in finances?
So part of that is really from our standpoint as financial advisors and planners is what we technically call risk mitigation. And if you think about it from the corporate standpoint as well, but when we look at a risk to a couple's or anyone's plan, part of that risk is the long-term care and understanding how they're going to get care, what that's going to look like, who's going to provide care, how they're going to pay for it. There's a financial element to it, but we see a bigger picture, and the financial element is one part of that. Not just, a lot of long-term care insurance providers really just focus on the policy. We kind of take a step back and look at the bigger picture and understand more of what's going on in their lives and how that works for them.
Well, and that's super important. I'm sure you've seen an increase in probably people asking about those kind of services.
Definitely.
100%. And then, the statistics show that more and more individuals, especially seniors, are winding up in long-term care facilities, assisted living, memory care. And for those who don't know anything about senior living communities, um, there's individual where they're kind of free to do what these seniors want to do. There's assisted where they have some help coming in, maybe directing them to activities, to lunch, and then you have memory care, which it's a full blown, pretty much hands on experience with people that maybe have advanced dementia,
Hmm.
Alzheimer's, and these places cost a pretty penny,
They
especially for
do.
yeah.
They do. They're more expensive than people realize, and that there's such a sticker shock with this.
Well, and to be honest, a lot of people might classify these as like nursing homes, but they're like full-fledged apartment complexes now.
Oh, they're very nice.
I live in them. I was literally
Mm.
just at a shout out to Watercrest, Myrtle Beach. They've got a granite countertop at their bar.
Oh, nice.
Like, I mean, talk about, and especially in a place like that, you're not drinking and driving. You're just going up to the bar and going to your room. I mean,
Right, right, right.
that,
Oh, I've got a client that he's in a nice facility here in the town that I'm in, and he's like, said, "What's the meals like?" I said, "We have prime rib every Wednesday night." I was like, "Don't you ever get tired of it?" He's like, "No, I don't have to fix it. I don't have to clean up the dishes." And he goes out dancing like once a week. He's in his early 80s. He's still dancing, so it's awesome. Yeah, he's living the dream, man. It's nice.
that's rad. I mean, you're seeing the quality of food, classes, room, all these
Hmm.
going up in senior living. Again, it does cost quite a pretty penny, especially if you're not prepared for these kind of things happening.
It does.
And Billy and I were talking about these a lot of these things happen suddenly. They're not just like oh, we're going to take our time and prepare for them. They smack you in the face. We were smacked in the face with mom's stroke, and like a lot of other families are, they don't know what long-term care is, what that means, where does grandma or grandma go into a living community. So Billy, could you maybe go through the process, like, hey, listen, my mom, I'm worried about my mom. What is long-term care? What does that look like? Just kind of like
Sure,
the
sure.
101.
Yeah, I'll give a couple of minutes on this. So just to kind of set the stage and the context on this. So we at Thrivent we call it extended care planning because it's a little bit more than just the policies I was mentioning earlier. We want to look at the financial and the non-financial, and we have really kind of interview our clients and kind of start with the family dynamics. Who are you close to? Who's physically close to you? What's going on with that? Who's going to care for you? Is there someone that's going to manage the care? We have a lot of times we have those doers that just want to come in, they want to, clean house and wash dishes, but they don't want to really physically care for someone, and they're afraid of like giving them medicine and messing that up. So, and how do you manage the caretakers that maybe somebody's coming in the home, or maybe you're at an assisted living facility, independent facility, or nursing facility? Who's there managing care for mom or dad or for a loved one? Who's doing that? So we want to know all of that. Then we want to understand more about the dynamics of the financial piece. And that's where the long-term care policy comes in is typically folks, you either really pay out of one or two buckets. You pay out of the assets you have, and those assets could be things that you saved up in your 401k. Maybe you have saved up over time. There's something called an HSA, a health savings account that you can actually pay for long-term care out of. There's any kind of financial means that you have, you can actually they've approved now looking at reverse mortgages. Those can be for some people. You can do a reverse mortgage on your house, or HELOC, or just sell your home. Just sell your home, take those funds and invest it into long term care provisions for where you're going. I was just talking to a couple last week. They were like, we were looking at long term care and moving, and it was like they wanted like this much money to move in, like $300,000 is what they were telling me. And I was like, so just to save their place, right? And so it takes a lot of money. So what we do at Thrivent as a long-term care provider is that holistic approach. But then when we get into the policy side, obviously people have to apply for the policy. They have to go through underwriting. What that does for them, it gives them a bucket of money to pull from. So they're leveraging a smaller premium for a larger amount of money. Very much like life insurance. If you pay for life insurance when you're younger, if something were to happen, it helps to cover income, it helps to cover debt. In a similar way, that's a smaller premium for a larger benefit. Very much so for long-term care is that smaller premium for that much larger benefit is tailor fit to that family, to that couple, to that individual to say, what do you need? What do you really want? What does that look like? Let's balance those out with whether it's budgetary constraints, whether it's I just need a supplemental policy. I just need something that's just going to help me pull from it. Maybe I want a large bucket of money for a shorter period of time. There's all kind of things that we can do with long-term care policies on that front, and every one of them, I can't believe it after I've been doing it for so long. Every one of them are different. Every one of them are individualized to each person. So I think for me, what I'd like for your audience to hear is, if you're 40, 50, somewhere in that range, start looking into it, start reading up about it, start talking to professionals about this. The space doesn't change a ton over time. It hasn't changed a ton over time, but it can. But you need to educate yourself on things like that. And there are risks associated with entering in this space too early and then without education. And I can go over those if you like. But I would definitely strongly encourage your audience to, go start before they're ready. I feel too young to start this, right? I remember talking to a lady who was a client of mine and friend. She was in her late 50s, and I just said the word. I just said the phrase long-term care, and she just started getting emotional. She said, "I can't believe I'm that old." I'm like, "I can't believe I'm that old either." But the reality is that we're aging every year. Father Time waits on no one, right? And so having that little bit of wisdom, having a little bit of that care to sort of go ahead and say, I'm not ready. I want to go ahead and ask questions about this.
And I've got to agree with you because I know we brushed on this real quick, but when something happens, it happens,
Yes.
right? Once it's already happened, a lot of these you can't really get coverage. You know what I mean? Like there's I don't know why that did that. I guess the thumbs up or something. But yeah, fireworks.
Hey, it's awesome.
Great, great point. Um,
Well, at least it's not my Christmas tree exploding in the background. That's good, right?
Your first on a fire on a podcast, I
I
guess.
know, I know. It's
Um, but yeah, these things kind of smack you out of nowhere, and
they
they
do.
forever they change your family forever.
Yes, yes.
Um, so with that being said, to add on to what Billy's saying is, if you're saying I'm too young for this, means it is the exact right time for you to be doing this because tomorrow might be too late, right? You're not promised tomorrow by any means necessary. And on paper, my mom was healthy. I mean, she smoked cigarettes and stuff like that, but on paper, she was still walking around and stress, not working out enough, all just kind of compiled, and boom, families changed forever. So that is something that I regret, and if I could get across the audience, um, just start looking into it. That's the worst. What's the worst thing that's gonna happen is you get a little bit more knowledgeable on it and understand what could happen in the future. Make sure that your elders are taken care of because these communities are not cheap at all. I mean,
Hmm.
$300,000 Billy was talking about is, I mean, people don't just have that in the bank account.
No, no.
So on that, could you maybe tell us maybe a story about someone who wished they would have gotten the coverage or I mean those kind of things? Could you maybe just like brush on something like that?
Sure, absolutely, absolutely. We, as with a lot of things on the insurance side, the insurance company is managing their portion of the risk. And so part of that is the fact that at some point you just get, you're too old to really go through underwriting and get long-term care coverage. For us at Thrive, we set that at age 80. So once you're 80, you can no longer apply for coverage. And I had a situation where couple comes into my office. I'm sitting down talking to him. The husband he's 80. And his wife is 79. And so he's like, well, I'm not big on insurance anyway. And I'm like, fine. I mean, how about we just cover your wife? Let's just get her taken care of. Fast forward a couple years. Who has the stroke?
Guy.
The husband has the stroke. Who needs long-term care? the husband needs long-term care, right? And his wife may need long-term care at some point down the road, and she's covered. And but he's the one that could use in-home care. He's the one that could really use that assistance of saying, we're pulling from our, and that point, that couple now, when I talk to them, they're pulling from their personal funds to have somebody come in the home to take care of him. And in their situation, they're working it out. They're able to work it out. In other situations, I've seen. So that's one nuance of what that looks like. Um, I've got I've got a military veteran. He is pretty healthy, probably mid to late 50s, and was doing a financial plan for him. He's got disability coverage from the military. He's got his pension from the military, got good income, but he doesn't have the assets. So if something were to happen and he's not married and his kids are older and they're out of the house and he is away from everyone. And so in a situation like that, it's doing a plan for him. I was like, and his parents are in their late 80s and early 90s, and his dad's still working.
What?
Yes. So in our minds, when we hear that, so one of the things that your audience can take away is longevity is good. It's a great thing when we live longer, but from a financial planning standpoint, it's a risk multiplier. So for him, I said, well, you may be able to save enough in the 30 years. We don't know that, right? So let's go ahead and put something in place that's going to supplement you in case something happens. Your mom and your dad, they haven't had a stroke. They haven't had any major events. They're being healthy. They're very blessed. Said that may not be the same road you're on. Part of your planning, part of your risk is that if you were to have an event in 5 or 10 years at 62 or 67 or 72, whatever, and you needed coverage and you needed a plan, where would those funds come from? And he, obviously, us guys, we think we're tougher for as long as we can stay tough. And it took a while to get through, and just coaching him through it. Just really, he just needed that coaching, and he had a lot of great questions. He had a lot of great questions, and he was really engaged in the process. What does this mean? What does that mean? And it took a lot of folks come in and they like, I want to sign up for this, and they sign up for it, and we go through underwriting, and they're good. He had questions, and it was good, really good. So there's a couple of stories there, but I will say one of the risks that if I could speak to your audience about this trip, one of the risks I would say is it's long-term care policies are different than life insurance. A life insurance company doesn't really monitor or care about whether I'm going to go ahead and put in at life insurance company A, B, and C and see what happens. That's totally fine if that's what you want to do. If you do that on the long-term care space, what happens is there's a group called the Medical Information Bureau. You can look this up. I joke around with people like it's not the Men in Black, right? It's the Medical Information Bureau, and it is very, very sobering to understand that your medical information is kept there. So if you go out and apply for long-term care with long-term care company A and they deny you, you can't just turn around and go to apply to long-term care company B and just say, hey, I want to get coverage with you. Company A didn't cover me. I'm going to go to company B. That is on your record now at the Medical Information Bureau. So I encourage all your audience, your listeners here, if they can, to try to get an anonymous pre-screen and find a company that will do some type of anonymous pre-screen that doesn't trigger a record on that MIB. And it's really going to be beneficial for them to understand the risk that's associated with that, and that they may have to wait a year or 2 years or longer to reapply.
Isn't that why it's so important for, especially, hey guys, listen up here. We die 5 years earlier than females on average. Is why it's so important for us to get regular checkups, making sure that we're taking extra better care of ourselves, because we'll take care of the house, we'll take care of the finances, the yard, the car, but the last thing that us guys take care of is ourselves.
Yeah, that's true. That's well, we're built to take care of people. Our wives, if you're married, are built to nurture, and so we are the protector provider in general in most cases. So, but that's so true. I mean, we quote that all the time. It's like, if I underwrite and help a couple through that extended care planning session, and then if that leads into getting extended, long term care policy, the conversation we have, they're the same age, Trip. They're the same age. You're not going to be here. She's going to be here longer than you. Statistically, your wife's going to outlive you. And a lot of times, I'll have a conversation with them, and the husband will be like, well, what if I just don't get it? Well, she's going to outlive you anyway. So we at least need to take care of her because you may not be here statistically to take care of her. So this policy is a way that you can kind of say, hey, just in case I'm not here to take care of you, let's at least financially prepare. And then let's also look at wills, power of attorneys, healthcare power of attorneys, those other things. We talk a lot in the financial planning space about the three-legged stool, and that you need a CPA, you need a financial advisor, and you need an attorney. And that if you have all those legs, propped up, and that you've done your due diligence in each of those areas, then you are going to be more suited for what may come as you age in life. And you're going to have the durable power of attorney in place for the financial planning, the financial side of things, and as well as the healthcare power of attorney, as well if you need to do something for either one of your parents or for your loved one, a spouse or whatnot. You're going to have those pieces in place, and the financial advisor is going to help with the financial and other things. As I say, we typically drive that conversation around the three-legged stool. Most CPAs I know aren't encouraging you to go get an attorney. They're not encouraging you to go get a financial advisor. It's just what we do in our space, and it's part of the mantle we carry that good to great advisors work with on their clients.
Well, it's the full spectrum, right? Like each one of those each one of those jobs or professions looks at the person from a different angle.
Mm-hmm. Right,
It's
100%.
no different than when I'm doing my genetic testing and I'm like, hey, we got to worry about your sleep, we got to worry about your nutrition, we got to worry about your workouts, we got to worry about your hormones, we got to worry about everything because they all coincide with each other. They all work together. But right now they're all apart. You got a nutritionist over here, personal trainer over here, yada yada. It's the same kind of thing I'm seeing here. Is all three of those are like part of the same stool, right? They're just trying to make sure you're sitting right, at all times. And that's again different perspectives here. Um, Now I know for the listeners out there, this always isn't the most sexy stuff to talk about, right? Like
No,
it's not. Billy and I are talking about doing our own Sports Illustrated. I'm just kidding.
no, no, I know. Yeah, it's hysterical.
Um, but it's something that unfortunately is important. And us pushing these kind of decisions off doesn't make them go away. Coming from someone who wishes they would have taken these kind of steps a decade ago. They always say the best time to plant a tree is 20 years ago. The next best time is to start today. So, with that being said, you guys make sure you guys are looking into these kind of things, and especially here in the North Carolina area. I'm sure you're certified in what, like 7, 8 different states.
Correct, correct. Yeah,
Um,
I cover most of the East Coast, the lower East Coast, yes, and I've got a few other states as well. Yes, sir.
so if you guys are in the Southeast, those kind of things, reach out to Billy. Billy, what are some of your ways to contact? I'll put all these in the copy below the podcast so you guys can click on them. But you got a
Sure.
website, social?
Yeah, I've got a website there. I'm on LinkedIn. If you look up Billy Stone Thrivent, you put those three words in, and Thrivent is Thrivent. If you put my name Billy Stone Thrivent all together in there, my webpage will come up. You'll see that it'll have my information there. I'm on LinkedIn as well. If you look up me under LinkedIn, you should be able to find me there also. Folks can connect with me either through email or through my mobile phone. It's fine, not a problem at all.
Well, I highly recommend you guys at least reach out to Billy. talk to him about these kind of things. Again, it's not always the most fun topic, but I'll tell you what feels better than fun is feeling protected and things are taken
Yes.
care of.
Yeah, and I will say, Trip, I have a lot of conversations with folks, and they back away from a long term care policy, but we at least have the conversation. So it hurts no one to have a conversation. There's no obligation. It's just what we do in the space. Unfortunately, probably about I think the stat somewhere between 10 and 12% of Americans who can have a long term care policy have one. Now, if you're, if you've got the means to pay for it and want to leave stuff to the kids, that's fine. But I will say that, the thought process that I kind of help clients go through is if you're sitting there going, what am I going to do here? Is like, are you going to have to dip into your retirement savings to cover what is going on with your mom? If if your spouse is there and you happen to be gone, are they going to be able to pay for it? Right? Is there enough left over? If you're wanting to be to be generous and really get into generational planning and that longer term generational wealth piece, what's going to be left over for them? Do you want to leave something for your kids or grandkids or your great grandkids as well? And then look at the tax consequence of all of that stuff because taxes can be a really big burden that can hit later in life, and the timing of it couldn't be worse, right? So I just give your audience a couple of questions there to think about as they move forward.
Yeah, and I know we're getting towards the end, but I want to
Sure.
go ahead. I want to go ahead and I want to get people thinking right now. This is a big thing. If your parents or grandparents, smokers, drinkers, they don't work out, don't drink a lot of water, high sugar intake, um, don't move a lot, those kind of things. It's not if something's going to happen, it's when you're multiplying a ton of different risk factors. I mean, women over 60, 50% of them have osteoarthritis.
Mm,
And that can lead to a lot of people think that falls happen and then you break something. What a lot of times happen, especially with women, is their bone will break and then they'll fall.
mm,
So it'll be a pre-break when they fall just because they weren't taken care of. So if parents or grandparents have any of those risk factors going on, any of them at all, you got to take a serious thought about how am I going to take care of my parents or grandparents in the future because a lot of us, especially myself included, don't have this kind of money just stowed away
mm,
like a squirrel. We don't, you
yeah.
know. Look into it. Click on these links below in the podcast here. Check him out. He's a really good dude. He's a believer just like I am. We got along with
Mm,
that day one. I want to have him back on
amen.
later, go into more depth on policies, what those kind of look like, so you guys have more information because there's some of you guys out in California, in Montana, Texas. I mean, we got listeners all the way from the Philippines, Australia. So, I'm not sure how your guys' country works with these kind of things or how you guys are taking care of loved ones, but look into it because it's not if something's going to happen when you have all these different risk factors, it's when, and it's best to be prepared instead of ignoring these situations. So, Billy, I just want to thank you
I
so much for
agree.
coming on this podcast and talking about not the most easy stuff, but the right stuff.
Absolutely. Anytime I can work with someone like yourself to get a little bit more information out to folks, to get a little bit more of the emotional side of things and some of the stories out there that have happened, and the stories are endless. I could share more, but I appreciate your generosity in having this podcast and having me on. It really means a lot. So thank you.
Of course, man. Of course, this is stuff that needs to be talked about. That's why I love having my own podcast is I get to choose.
That's a good thing, right?
Yeah, it's like, hey, listen, these are conversations that we need to have. A lot of us don't want to have them, and that's the reason we're in a health epidemic and all sorts of things because we're basing our wants, not our needs. Uh, real fast before when we sign up, do you have any words of wisdom, any advice for the audience, especially?
I think the big thing is definitely engage with a planner on the bigger picture. If you have a plan and you know that and how a policy could or couldn't fit into that, that's a bigger piece of the pie, if you will. We do a little bit with our extended care planes, what we call it, we do a little bit of that there. But it really is more of getting, who's your quarterback, who's the players. But the big picture is start before you're ready. Just go ahead and get in there and start, and try to just get in there and start before you're ready. That's the big thing. It's just, if you're over 40, start considering it, educate yourself. If you're over 50, you need to be talking to a long-term care professional, and our financial planner. It's helpful to have one that does both, so they can put it all together for you and let you see how it looks. That's what I would encourage, and that's what I would, a little bit of words of wisdom there.
Well, awesome, man. Thank you so much. Make sure if you guys have a similar story, comments on the podcast, you guys can check us out at Through Fire Wellness Solutions on Instagram, Trip Parks on Facebook, and I'm on TikTok, but don't even look at my TikTok. It's a freaking and then you guys make sure you guys are checking Billy Stone, especially go through his LinkedIn. He's got a great LinkedIn setup about his previous work experience, why he's
Sure.
passionate to work with people first person. And I couldn't be more grateful for his time here. So make sure you guys are liking, subscribing, sharing this to your friends, uncles, cousin, best friends, squirrels, neighbors. Please share this as much as you can. We need all the help that we can get to grow this podcast and get more views, more great guests here like Billy, and to make sure that we are educating this
Yeah,
audience. Thank you guys
that's a
so
big
much.
deal.
Peace.
Appreciate it. See you. Thanks, Rip. Appreciate it.